Alright, so today we're gonna speak about time frames and charts, and what is a time frame, and what time frame you should use to trade, and does it even matter? Is it even important? What is the purpose of a time frame? Let's just start off by saying a time frame is the amount of time that each candle bar represents. As of the moment right now, we are on the minute time frame. So each one of these bars represents 1 minute of time. And as we can see, the market starts off 9:30. Market is still open. We're about 45 minutes before the market closes. So as we can see, we're looking at SPY right now on the 1 minute time frame. Now I can adjust the time frame, I can change it, but you usually want to change your time frame depending on how you're trading. So if you're day trading, most people I know like to stick between the 15-minute to even the 1 second time frame. The 5, 3, and 1 minute time frames are most popular. I personally like to use the 1 minute time frame, but that's just me. And when I started trading, I looked into I would always look at the hour time frame. So let's just jump into, we're looking at SPY, by the way, and we're looking at it now on the 1 hour time frame. The 1 hour time frame. Let's switch over to a forex pair. Okay. Let's look at this. With a 1 hour time frame, it's a lot easier to read, and when you are looking at the 1 hour time frame, you want to hold. It's ideally for the swing or position trader who plans on holding onto their trades for a longer period of time. At Awake, we focus on day trading. So let me go back to the 5 minute. In the beginning, I thought that trading on the 1 minute chart was kind of crazy. As we can see over here, we're on the 5 minute time frame, and we can see the market going up and down. Now this looks very simple and very easy to read. However, from here to here, that's about 5 minutes, but there's a lot of movement right there, and there's a lot of money right there as well, depending on how much you're trading, the volume at which you're trading at, the contracts which you've purchased. So let's move back to the 1 minute time frame. So when I heard that people were trading on the 1 minute time frame, when I learned from my mentor that he traded on the 1 minute time frame, I was shocked. I thought he was staring at the chart. I thought that he had some type of superpower that allowed him to interpret data very quickly. I thought that his hands were very quick, and yeah, they were, but it's actually slower than you think it is, because when you're trading on a shorter time frame, like the 1 minute chart, it moves slower than you think it does. Now, the reason why we trade on this time frame is to get into the trade at the perfect moment. We want to enter into the trade with accuracy so that we can maximize our profitability. You can even go on the 5, sometimes I even look at the 30-second time frame. As we can see over here, let's go back to the 1 minute time frame. You can see the entry for this call would have been right around here. I would have entered into this call probably right around here at 391.6 on the 1 minute time frame. Now, if I look at this on the 30-second chart, I would have entered into this trade probably around here, which would have been about 30 cents. There's a 30-cent difference right there. Now that might not seem a lot, but when it comes to large amounts, it means something. It definitely does. And if you were to speak to anybody and tell them that there was a 30-cent move in the stock market, a lot of people think about 30 cents and they're just like, no, that doesn't really matter that much. What is 30 cents to them? However, we are trading options here, not shares. So with one share, 30 cents doesn't mean that much, but multiply that by 100, multiply that by 200, 300, 1,000, depending on how many contracts you have, and it'll make a big difference. Now let's look at it on the 10-second time frame. As we can see over here, the entry would have probably been right around here. And hold on, that is 131.3. So this, yeah, probably, it's similar, but you can enter into the trades more precisely. Now, I wouldn't go anywhere below the 10-second time frame. There are people who do. There might be people who even trade the 1-second time frame, and I think trading the 1-second time frame, it might be a little bit too intense. But as we can see over here, it's not as easy to read. Could have entered in over here, 191.1, could have held on to it. As we can see, it's bouncing off of our levels over here, and then it breaks out right around here, 191.5, and it goes up. So could enter here, hold on to it, it goes back down, maybe you close out to break even, re-entry, goes back down, re-entry over here, hold on to it, and the breakout. So from 191.1 to 191.5 or 191.3, it does make a difference, but that would require a level of skill and practice. You need to practice to make sure that you can trade this chart, and I'm sure you can. I'm sure anybody can. It's just that it requires time. So let's look at the movement of it right now. As we can see, there's a new candlestick every second. Here. It jumps very quickly. And personally, I feel more comfortable on the 1 minute time frame than any other time frame. Now, if you're gonna hold on to your trade for years, if it's just gonna be something that you're gonna hold on to, then using the 4-hour time frame might be a good idea. Using different indicators might be a good idea. Right now, I would probably use a moving average if I was trading long term, but as we can see over here, we're looking at the S&P on the 4-hour time frame, and this is the beginning of 2022. This is the beginning of 2023. Looking at this, breaking down the charts, analyzing it that way might be a good idea for, definitely a long-term approach. So that being said, we're going to go back to the 1 minute time frame, and we're going to just look at the simplicity of this. So over here, enter into the trade, hold on to it, possibly get out over here, re-enter over here, and just hold on to it, and be profitable. Now let's switch over to another ticker symbol. Let's look at NVIDIA. Looks like NVIDIA just became a little bit bullish. So it's too late for me to enter this trade right now, but I would have entered right around here. Maybe I can probably still enter into it. It's a little bit more of a risk, but I still can. By the way, if I was trading this, I would have my setup prepared as soon as it broke our second line over here. And if I did enter that, I would have. It looks like it's going to be profitable. So let's look at this on the 10-second time frame. Even better, we have more data and an earlier entry time. I would have entered into this trade over here and held on to it till there. So in comparison to entering into the trade right around here, so the time on this is 15:19. Let's look at it, 3:19, and let's look at it over here. This is about 3:17. This is about a minute or two before, but that minute or two before can make a big difference when it comes to trading, taking into consideration that you can do a lot in a minute. It doesn't seem like a long time. I mean, it does. A lot can happen in a minute. It doesn't seem like much can, but a lot can. So this might be a good idea to trade. Anyway, going back to the 1 minute time frame. As we can see, if we entered into that trade, it would have been profitable. So with that being said, that this is the video for this week. We looked at Nvidia and we looked at SPY, S&P, and we were exploring multiple time frames.